Hello guys, welcome back to my channel. My name is Gideon and I'm a forex trader. Today I have something very special for you guys, a winning forex trading strategy. Okay, it's an ICT strategy. It's based on ICT concepts, and it's really very important that you watch this video till the end so that you can learn how this works. Okay, so I'll be going over to the charts to show you how this trading strategy really works. It's really simple to understand, it's comprehensive and yet very powerful, okay, if you applied it correctly. If you identified the zones, if you identified exactly how I'm going to show you on the charts how to identify certain areas on the chart, you will be able to win with this strategy. So please stick with me till the end of this video, and if you like the content, consider liking this video and also subscribe to this channel, as I'll be bringing you content like this on here every week. So guys, let's go over to the charts and I show you how this works. Just help me on my own journey and I believe it will help you too. So guys, let's go over to the charts, guys. All right guys, we are on the charts right now and we are going to look at how we can how best I can explain this so that you understand. This is really a winning ICT strategy based on ICT concepts. So we are going to look at these 6 things. We're going to look at order block. All right, hold on a second. We are going to look at this order block. We're going to look at support. We're going to look at liquidity sweep or liquidity grab. We're going to look at fair value gap. We're going to look at change of character, and we're going to look at retest and entry point. So we're going to start with order block. All right, so now to identify order block, we must know, because this is, first of all, the structure we are looking at is a downtrend. Okay, first you have to determine this is a downtrend. I'll color code it red. So for a downtrend, for you to know this is a downtrend, you are going to be looking at lower lows, lower highs, lower lows, lower highs. All right, so in a downtrend, that's what you are looking to see. There's always a break of structure to the downside. A break of structure means this, okay? Like here, there was a break of structure. So here you have a lower low. This is a low, it's a lower low. So there has been a break of structure here to the downside. So you have BOS here, break of structure over here, BOS, break of structure. For a trend to happen, really, you have to have a break of structure. So to form lower lows, lower highs, you know, higher highs, higher lows, you have to have a break of structure. Otherwise, you have a consolidation, sideways movement, and there is nothing. There is no trend. Okay, so I just wanted to tell you that for those who are beginners and they don't know. Okay, so these are lower lows and lower highs. In a downtrend, that's what happens. Okay, so there is a low here, a lower low here. This low is lower than this low is lower than this low, and this low is lower than this low. That's why we call this a lower low. It's a lower low lower than this one. So you have, in a downtrend, we're looking at a bearish situation. Bearish means the market is going down. For those who are new, it's the price action is heading south. All right, so this is what we are looking at right now. All right, so as to illustrate this, so we have also in a downtrend, we have a lower high here, we have another lower high. I'll just clone this. Okay, we have a lower high here. That means this high is lower than this high, and this high is lower than this high. So we have a downtrend. I'll color code that trend red. So we have a clear downtrend. Okay, that's a downtrend. I'll color code it red. So this is a clear downtrend. So in a downtrend, okay, in a downtrend, you have this kind of structure. There's lower lows, lower highs. Okay, that means the price is headed down. Now, in this winning strategy that I'm trying to illustrate here, we have to identify, first of all, the order block. Order block is the last candle before an aggressive move that changed the structure or changed the direction of the market. Now, the direction here is bearish. But if you have a candle like this one, I'll show you. Let me just illustrate here. Something like this. All right, you have something like this. Okay, so you have something going on like this in the market. So assuming, let's just color code this blue because this is or green, this is a bullish move here, this is a bearish move, this is a bullish move. So what we see here, let's assume our support level is down here. Our previous area of support is down here. There has to be an area of support. So our support has to be there. All right, our support area. So the price is trending downwards, the market structure is downwards, but it reaches a support area. And at that support, most traders are looking to buy at support, and that's where there is manipulation. That's where ICT comes in. ICT means inner circle trader. And most of the big players like the banks and the institutional traders, okay, they like to manipulate around this area. There's manipulation, a lot of manipulation, because there's a lot of buy orders at support. So they want to grab liquidity. They wait to grab liquidity before they can go to the upside, to gather momentum to the upside, for that upward momentum or that bullish momentum to the upside. Definitely at support, you are supposed to be looking to buy, okay? But you have to wait for certain confluences to be sure, or to be at least on a better side, okay, to increase your chances of winning. You cannot be 100% sure in the market, but to increase your chances of winning, you have to wait. You have to trade like the institutions. You have to trade like the banks. You have to know where liquidity is. You have to identify support. You have to identify order blocks. You have to identify liquidity, okay, before you can take your decision. All those confluences have to be in place. All right, so now what we have here, we have identified the support area, okay, previous support area. It has to be a major support, okay? And then our order block is somewhere on here. It has to be the last candle. It has to be the last candle before this aggressive move. It is usually the last candle before this aggressive move to the upside. So pay attention to that. It has to be the last candle here before the aggressive move in the opposite direction. So in this case, the opposite direction is the bullish direction. It's the bullish bias. So this bullish bias, why do we say that there's a change of direction? It's because there is this change of character around this area. There's a change of character, okay, around this point. Change of character around this point here. This is a change of character. Change of character means the character was downtrend. Now it is an uptrend. So the character has changed to an uptrend. Why? Because this lower high has been taken out. Now there's a new high. Guys, there's a new high over here. Let's call it a higher high. There's a new high over there which has been created. So this is the lower high. The new high has been created. It took out this lower high, meaning that the price looks to go higher. So we are looking to buy, but we are waiting for confluences to buy. So now this strategy is valid if you have, first of all, there's a support. It's a support area. Secondly, you have the order block, okay, the last candle before this aggressive move. It has to be an aggressive move which changes structure. It changes structure, which means it creates a higher high here after breaking above this previous high, lower high. So now we have a new high. That means there's a change of direction in the market. So we are looking to buy. So when this happens, okay, you also have a liquidity sweep down here, okay? Just to illustrate, there is a liquidity sweep at this point here. Liquidity sweep. There's a liquidity sweep around this area. Normally you have long wicks that are piercing downwards to take out the stop losses of people who have placed buy orders around here. Because normally retail traders place a lot of buy orders around the major support areas like this. They place their orders like that. So what happens is that the institutional buyers wait to take out the liquidity, the stop losses of people here, okay, before the price gathers momentum all the way to the upside. So they are waiting for that to happen, okay? So don't be caught up here around this area. Don't be quick to take your buy orders around support. Wait for a liquidity sweep, which normally happens. This is a liquidity sweep. A liquidity sweep is normally piercing spikes to the downside, taking out liquidity, okay? It breaks below the support and breaks below the order block. Guys, the liquidity sweep is normally below the support if it is on a downtrend. It is below the support area. At resistance, it is above the resistance. The liquidity sweep is above the resistance and it is below the support. All right? So pay attention to that. Liquidity sweep is below support and above resistance. So it takes out stop losses before it gathers momentum to go in the opposite direction. So pay attention to that, okay? So, and it normally spikes down here. And so just in case you are also placing a sell order here, thinking that now the market is going to continue down lower, guess what happens? As you place your stop loss here, above here, the price has broken down, you think it's going to continue further, it returns, take out your stop loss and gathers momentum to go to the upside. So either way, whether you are buying or selling, there is liquidity grab either way. Takes out the buyers down here and takes out the sellers up here. So be patient, right? So this is what is going on in the market. I'm just checking my microphone to make sure I'm still sound. So the order block is here and the support is here, and we have confirmed all of this. And then before it changes structure over here, there is normally a fair value gap around this point here. So you will find here a fair value gap around this point here. There is normally a fair value gap. Okay, so you have a fair value gap over there, which is mitigated. That fair value gap has to be mitigated and wait for confluence around this area, which we are calling retest and entry. This is a change of character, all right? And then retest and entry, this is what I mean. The price will break above, cause change of character, return to mitigate the fair value gap, okay? And to retest this previous lower low area, which was a resistance, which now has turned support over here. So it is testing these areas, all right? Before now we can look for a confluence around here, either double bottom, triple bottom, bullish engulfing all the way to the upside. Okay, we are looking for something like that. All right, we're looking for something like that. I don't want to bore you with all these drawings, but you can see the entry has to be around this point. Has to be around this point here. Our entry, retest and entry around that point. Okay, our retest and entry has to be around here, where you place your buy. All right, your stop loss has to be below the fair value gap point area, and after you enter after the close of a bullish engulfing candle, all right, to the upside. You target a 1:2 or 1:3 risk to reward ratio. Normally target these previous highs here. You target there. All right, this is where I would place my target up here. Okay, I will place my target up here, the previous highs. All right, so that's what I will do. I'll target there. Okay, so you can take a screenshot of this and take note of this. In a downtrend, this is what happens. This winning strategy is very comprehensive. You don't need to stress about it. This is how it happens. So you determine it's a downtrend. You look for your order block, the last candle before the aggressive move to the upside. Okay, it's a support area which is broken to the downside. Liquidity sweep has happened. That means liquidity, it has taken out stop losses below here. It has gathered momentum. It's an aggressive move which forms a fair value gap, an imbalance in the market. Okay, and then it breaks above the previous lower high, creating a new high over here, and it returns to the fair value gap, mitigating the fair value gap, and also retesting this previous resistance, which has now stand support. And then we are entering this market all the way to 1:2, all the way back to the previous highs over here. All right, so this is what we are looking at. This is the concept. It's as clear as that. It's as clear as that. So now I want to take you can take a screenshot of this. It will help you to remember. There has to be, these confluences must happen. In a downtrend, you must have the order block. You must have, whether it's a downtrend or uptrend, you must have the order block. You must have the support area in case of it's a downtrend and you are looking to buy. And if it is on an uptrend, you are looking to sell, it is a resistance area. So you must have the confluence. And liquidity sweep happens, sell side liquidity if you are looking to buy. Sell side liquidity sweep has to happen over here. If it's at resistance, you are looking at buy side liquidity has to be swept before you can sell. Okay, there has to be a fair value gap which is formed, and it is mitigated after the price has broken above the previous lower high. Okay, created a new high before you can enter after the mitigation of the fair value gap. Look for your confluences at entry point at the lower time frame. You are looking at double bottom, bullish engulfing candle, any candlestick pattern that shows you that the price is going bullish, then you can place your entry. All right. Now let's go to the real market charts and I show you. All right. I show you what happens here in the real market. All right. I'll show you with it. I'll use a GBP USD chart. Okay. I'll use a GBP USD chart to show us. Okay. This is GBP USD. In case some of you cannot see it, I'll just make it big enough so that it's clear. So what we have to look for is support area. This is a support area. Clearly, this is a support area. Looking at this support, this is a support area. Okay, so we have determined there is a support here. There is a support. Okay, that's a support area. And also, hold on a second. So I'm just going to import this. Okay, this is our support area here. This is our support area. Okay, because there's a first touch over here. First touch, and then this area here touch also. Then the price return this. This is a previous support area. Has to be a previous support area. Okay, and we have determined also there's this order block. Before this aggressive move, you have to wait. You have to wait. So there is this aggressive move to the upside. Do you see this aggressive move to the upside? This is an aggressive move which causes a change of character here around this area. Are you seeing what I'm seeing? Okay. Are you seeing what I'm seeing? So this is what is going on here. All right. This is what is going on here. So there's a support area here, and then there is a break, an order block. This last candle, you see that candle there? Okay, that last red candle, you see this candle with a spike down here? So you have that before this aggressive move. It has to be the last candle before the aggressive move that causes a change of character, okay, to the upside. You understand? Or some would say which causes a break of structure, because this is a lower high, this is a higher high. You understand? So either way, whichever way you want to explain it, causes this break of structure or change of character to the upside. Okay, so this is an order block. I'll just color code it gray. Okay, so this is an order block. This is our order block. That is our order block. Okay, which caused this. After the order block, we have this aggressive move to the upside, which causes change of character or change or break of structure, because they broke this structure over here. It caused a higher high. So there is this previous high. Okay, there is this previous highs. So you have this high. Okay, which was our lower high. This which was our lower high. Which was our lower high here. Okay. Now we have a new high over here. I'll say new high. So this is a new high here. It's a higher high. So there is a kind of break of structure over here. Break of structure over here. Or, as I like to call it, change of character means change of direction. The character has changed from bearish to bullish now. Okay, but some would explain this is a break of structure also. Anyways, so to the upside, it has to be aggressive move to the upside. All right, it has to be that last candle. The order block is the last candle before the aggressive move that changes character in the market, that causes a higher high, that creates a higher high, or in the opposite direction, that creates a lower low. All right. So in the opposite direction. So it has to be in the opposite direction, because previously this was a bearish market. Previously, you can see this is very much bearish. I'll change that to red. This is a bearish market. When you go to support, we see now a change of character. A change of character. Price broke above this previous lower high and created a new high. So there's a change of character to the upside. All right. That's why I'm calling it a change of character. Some would call it a break of structure here. So this is what we are looking at. So now we have Support area, we have determined our order block. We see that there's an aggressive move which has changed the character over here. There's a change of character here. Change of character. Okay, over here. So we have a change of character, or even over here, right? And we are looking to see if we have a fair value gap. Fair value gap, I can see it over here. Okay, I'll just color code that pink. All right, we have a fair value gap here. There's a fair value gap here. Okay, it is this area here between this first candle, the end of this first candle week, and that one there. Okay, so in between here is a fair value gap. Let me just adjust it. That's a fair value gap imbalance created in the market. So normally when there is an imbalance created, the price action normally returns to that fair value gap. After breaking change of character or break of structure, it returns to close off that fair value gap before it rallies in the opposite direction. So it normally happens. That's an ICT concept. That's what normally happens, just like you see it here. Okay, after the break of structure here, or change of character to the upside, we have price return to mitigate this fair value gap. One of the rules of this strategy is that fair value gap has to be mitigated. That means the price has to return to fair value gap, close it out before it forms patterns back to the upside. So pay attention to all those confluences: the downside, support, then you have the order block, structure is broken, or change of character happens, and then the price returns to the fair value gap. The fair value gap must be formed before the change of structure. So you have that happen over here before you can buy all the way to the upside. So your entry, your retest and entry your retest has already happened here, because you know the price broke above this previous lower high. Okay, came back to retest that area, closing out the fair value gap before going. So this is a retest that has happened. So your retest has already happened. So what you are looking for is a pattern, a candlestick pattern on a lower time frame to enter this market. So what we are looking for is a bullish engulfing candle, which is this one here. This one, you see this candle? So this is where you would have entered the market after the close of that candle. All right, you would have placed your buy order here, placed your stop loss just below the fair value gap, and then targeted a 1-to-2, 1-to-3, or 1 to even 4 risk to reward ratio here. This is what you would have targeted. You would have targeted these highs. You would have targeted these previous highs here, this one here. Okay, that one you would have won, because you don't want to be so greedy. You target a 1-to-2 risk to reward ratio over here. Okay, even if you were to go to 1-to-3, you would still win, but you target the previous high over here. Okay, you would still win this trade very nicely. So this is what I would be looking at. So you can take a screenshot of this and study it at your own free time. In a downtrend, this is what you'll be looking at. All right, so this is a very comprehensive strategy based on ICT concepts, which you can apply in your trading, and you will be a winner. Yeah, so thank you very much for those who have watched this video to the end. Consider liking this video and also subscribe to this channel, because I'll be bringing such content weekly to help us on our trading journey. Thank you very much. Until next time, bye.